This is our Forex blog for May 1st, 2012. And like we do most days, we want to buy the strongest currencies versus a week. We have the dollar compared statistically to every other pair and vice versa. And we use multiple different statistical tools and then average them together to give the real-time reading. The Build Your Own Trend histogram uses different weights for different tools. You can customize this to fit your style. If you're a longer-term trader, you might want to have longer-term data being used. Some of the tools measure the direction, in this case the dollar is going versus all the rest, and the bottom two measure the intensity of direction. So when the majority of, for instance, yen pairs are going down and they're doing so with incredible intensity, you're going to see something like this. Underneath that, I show the percentage of currencies trending up or down on the 15-minute, hourly data, and then underneath that we have the daily, weekly, monthly. Trends change and move first on real time, then the 15 switches, and then the hourly, then the daily, then the weekly, then the monthly. You can see even with this incredible intensity, it took it about 20 minutes for the daily trend to shift from strongly up to down. And that's how most trends change. Most days you'll see currencies that have incredible strength, usually when that strength is, the 15-minute trend's up too, the hourly trend's up, the daily and the weekly. That's a trend that you really want to buy. Now the dollar and the yen were both strong last night, so you would have wanted to trade one of the strongest ones, which was the euro, against one of the weakest ones, which was the Australian and New Zealand. If you are always trading the ones most likely to trend, euro, Australian, you can see last night, it just took off. And even before that 12:30 breakout right here, it was showing you that the euro was strong and the Australian was weak. You buy that breakout here at 41, it shot up to the previous week's high, almost 100 pips away in less than an hour. And these kind of explosions don't happen every day, but typically they almost always happen when you focus on buying the strongest versus the weakest. And let's take a look at the euro New Zealand too. Not quite the same explosion, but you can see it took off, and then it came to our upper containment band. You got a nice little pullback right here. As soon as it starts going back up, you're in here at 52. If you use our trailing stop, you're out at 60. So, I'm sorry, 63.06. So that was about a 40 plus pip win if you bought this pullback right here. The dollar and the yen were both strong last night, so most of the time, if the euro is strong, usually the dollar or the yen is weak. But you could also have traded the euro, which really gave lots of buy signals. Lots of strength, very little weakness, lots of strength, very little weakness, strength, very little weakness. That's a trend that's likely to continue. Later in the day, when the yen's trend shifted down, you could have bought the euro against the weak yen. Let's take a look at that. Let's hit the minus key to zoom out. Especially later in the day when the yen was showing some signs of weakness. One of my entry methods, once you have a currency that's strong, is waiting for a 3 to 5 bar pullback and then buying it. This is just a tool that works on past bars for illustrative and teaching purposes. Range bar, 3 bar buy sell. And when you get a nice little pullback like this, especially when it's right near support, the hourly moving average, weekly S1, at least 3 bars down, the first bar that goes back up. When it goes a pip above that bar's high, which it does right here at 81, you get in and you can see it went all the way up to 02. So it went up about 20 pips. Basically, you're looking for a 3 to 5 bar range bar pullback. So later in the day, when the yen just lost all of its mild strength, just was the weakest one, the yen was going down against every other currency, and it was doing so with crazy intensity. Those are trends that are very likely to continue. The CAD was one of the stronger ones. Unfortunately, the euro lost its strength, as did the Swiss. But you want to buy the strong CAD versus the weakest yen. So here's what the CAD yen looks like. You can see it just took off. And this is a perfect example of why I like range bars. If you use a 5-minute chart and this thing took off, 81.10, do you really want to buy this breakout right here? And where do you put your stop? Underneath the weekly S1 is is a pretty decent place. But if you don't have any support areas right there, normally you put your stop underneath the previous bar's low, which is all the way down here. This 5-minute bar shot up 50 pips. So this is a perfect example of why I like range bars. So I'm going to bring up another workspace I've been leaving running, and we're going to find the CAD yen on here real quick. I don't have the CAD yen on this one running, but let me see, what's this one? Pound yen. Let me just put it on here as a range bar. CAD yen, 5 pips per bar. And you can see that when this thing took off, it came right back up to the previous high, which oftentimes is, resistance area. For whatever reason, they were selling there, and when it broke out, 80.95, you can get in this trade, and if you wanted to on a range bar chart, have your stop right underneath this little mini swing low, which on a 5-minute chart doesn't even show up. And then this just absolutely took off again, and it went from 80.95 all the way up to 81.52, where it is now. Went up 57 pips. Obviously, you're not going to catch all those, and even if you got out right here when it went sideways, somewhere around 81.30, you made 35 pips in a very short amount of time. Let's say you bought this breakout right here at 10 o'clock, 10:01, out right here. You held that trade for 15, 16, 17 minutes. It made 30, 35 pips. That's why I love range charts. And there's also some patterns you can find in range charts. The yen went down versus all the rest of them. When this took off, anytime you see a kind of a sideways rectangle pattern, when they break out, it tends to be a very profitable trade. Let me find another one of these real fast to show you. Here's one with the Australian. Okay, here's one of the patterns I like. Anytime you see a strong trend, a lot of times there's no 3 to 5 bar pullbacks. In this case, it went down 1 bar, up, down 1 bar, up. But anytime you see a pattern where over 4 to 6 bars, 4 to 8 bars, it's in a 10 to 15 pip range, going up, down, up, down, up, down. When you see a breakout of that in a currency that has some strength, the Australian was getting strong, the yen was weak. When it breaks out of this, it's a pretty high probability trade. You want to draw your fibs on it. And it's usually a good idea to get out at the first fib target of half. If it stalls there, in this case it shot through it, and whenever it shoots through the first fib, especially if you can see this one up, 1 wave, 2 waves, this is a 3rd wave up. Usually 3rd waves are the end of the move, and so if it shoots through the first fib, I tend to get out of my entire trade at the 2nd fib here. So 82.94, you'd be in this trade at around 70. You made 24 pips while risking less than half of that. Typically less than 10 pips. You buy the breakout, your stop's underneath here as it starts moving up, put your stop, cut it in half, move it to break even very quickly. And a lot of times the trades that don't work, it maybe shoots up 6 to 12 pips, comes out and stops you out at near break even. The key is small losses, big wins.